Hello guys, welcome back to our video lecture in ACP 311 Accounting for Special Transactions. So this video lecture is a continuation on our discussion with installment sales, but this time we will focus on repossessions and trade-in. So we will be addressing different accounting issues when there are defaults or repossessions or trade-in that happens along the way in the installment sales. So we have here defaults and repossessions. Installment sales transaction has higher risk associated on collection of its receivables. There may be customers that default in paying their purchases. So because of that, the company urge to repossess the merchandise from the customers who are in default. So again, under installment sales, as what we have discussed in the previous lecture, see installment sales, guys, it is a method of sales wherein it requires series of payments. So when the customer defaults or unable to pay consecutive or number of payments depending on how they agreed with the buyer, the seller has the chance or has the right to repossess the merchandise that is in default. So the repossessed merchandise will become part in computing the cost of goods sold and be brought back to the inventory account. So repossessed merchandise shall be debited to repossessed merchandise inventory. So that means if there are repossessed items, it will increase the total assets of the entity. It will be reverted back to the repossessed merchandise inventory account of the seller. So the accounting problem this time is the amount to be debited to the repossessed merchandise account. So the amount to be debited to the repossessed merchandise inventory account will be the fair value before reconditioning cost and normal profit margin, if any. So again, if there are default items, the seller has actually the right to repossess such inventory or merchandise, and it will be recorded in repossessed merchandise inventory and will be valued at fair value before reconditioning cost and normal profit margin if there's any. Now, the accounting procedures to record repossessed merchandise are as follows. So first, record the repossessed merchandise in an appropriate inventory account at its fair value. So again, it is estimated selling price less reconditioning cost and normal profit margin at the date of repossession. So when we talk about the valuation, it will be valued at estimated selling price less reconditioning cost and normal profit margin, which is on the date of repossession. Second, cancel the uncollected installment accounts receivable balance related to the account defaulted. So, for example, there are 10 more months remaining na payment, but again, the item was repossessed. So, ang equivalent nga 10-month payment nga wala pa nabayaran ni customer will be deducted to the installment accounts receivable. Okay, that means the installment accounts receivable will be decreased or will be deducted if ever there are repossession equivalent to the unpaid balance of the related accounts in default. And then number three, write off the balance of the deferred gross profit relating to the above receivable. So we will be writing off because we will have no chance at all of recognizing it or in realizing it. So you will be writing off that deferred gross profit. And lastly, recognize the resulting gain or loss on repossession. So if the given is the fair value and no information stated, if it is after or before reconditioning cost, then our assumption is that it is or then it is construed as before reconditioning cost and no need to deduct the reconditioning cost from its fair market value. But if the given is the selling price, then you have to deduct the reconditioning cost and normal profit margin. But if it is not stated, that the selling price is after or before reconditioning cost. Another tip is if the given is selling price, then deduct the normal profit margin. If the given is fair market value, whether after or before reconditioning cost, then ignore the normal profit margin. So these are the necessary things that we need to remember in accounting. If in accounting in times of repossession. So for example, we have here um, default and repossession on April 30, 2020. So it has a remaining installment accounts receivable or unpaid balance of 2,000 with a gross profit rate for 2020 sales nga 30%. So the gross profit rate when that particular defaulted item was sold is 30%. And then the expected or estimated market value of repossessed merchandise, guys, will be 1,200. So therefore, the loss on repossession may be computed as follows. So fair market value of the repossessed merchandise will be 1.2 less unrecovered cost. So your unrecovered cost will be your installment accounts receivable or the unpaid balance of 2,000 less deferred gross profit sa 2,000 which is 30% or sa imuhang 1,200 deferred gross profit mo sa 1,200 times 30%. So you have 600. So therefore, we'll have a total of 1,400. So from the fair market value nato of 1,200 versus our unrecovered cost na 1,400, then therefore, we have a loss on repossession of 200 pesos. So that 200 pesos will be recorded as follows. So the entry to record the repossession on April 30, 2020, assuming a periodic inventory system is made, will be debit to repossessed merchandise 1,200. So again, as mentioned earlier, any merchandise which was repossessed will be recorded in repossessed merchandise account at fair market value. So in this case, the fair market value is 1,200. And then write off the deferred gross profit for 600. Okay, by the way, this deferred gross profit, guys, will not be multiplied sa 1,200, but rather it will be multiplied sa 2,000. So in this case, your total unrecovered cost will be 1,400 from 2,000 minus 600. So 600 is from 30%, which is your gross profit rate times your installment accounts receivable nga 2,000. Meaning that 600 is the amount of your deferred gross profit that will no longer be collected or that will no longer be realized. So that is why you have written this off. So again, we have a total deferred gross profit for 2020 nga dili na nato ma-realize or write off nato. So that is 600. And then recognize the loss on repossession, which is 200. So since that is a loss, that will be debited because that will decrease the total equity of the entity. And then also, um, since that is already defaulted, your installment accounts receivable for 2,000 will no longer be collected. So therefore, you will also be crediting installment accounts receivable 2020 for 2,000. Okay? So there's reconditioning cost incurred. If there's reconditioning cost incurred, it must be charged to repossessed merchandise account and form part of the inventory. Again, if there is reconditioning cost, it will increase your repossessed merchandise account and again will become part of your inventory. Take note that when there is repossession, the gross profit rate will not change or will not be changed or will remain constant. So again, your gross profit rate of 30% for 2020 sales will still be 30%. Okay? If ever naapay possible nga makolekta from other installment accounts receivable, so pag compute mo sa realized gross profit, you will still use 30% because when there is repossession again, your gross profit rate will not be changed. So that is for defaults and repossessions. So this time, let's proceed with trade-in. So when we talk about trade-in, Sometimes there are customers who are or who use their old items as a down payment for the new items they purchased. So the old item traded is called merchandise traded. So the merchandise traded in is considered also as a consideration received by the seller from the buyer. It is included in computing realized gross profit. So our concern in accounting trade-in is whether there is under or over allowance in accepting the trade-in. So as what the text has suggested earlier, that your trade-in also forms part of your total down payment. So since it is also part of your total down payment, then it will also be multiplied to our gross profit rate in computing for your total realized gross profit. So again, your trade-in may result into three possible circumstances. We have under allowance, over allowance, and no difference. So under allowance, traded in allowance is less than the net realizable value of the merchandise traded in, or the traded allowance given is less than the net realizable value of the merchandise traded in. While over allowance naman, the value of the trade in, or in short, the trade in allowance is bigger or is greater than the net realizable value of the merchandise traded in. And then, if no difference, so equal lang ang trade-in allowance or the net realizable value of the merchandise traded in. So, we don't have any accounting issues pag no difference ang traded allowance o ang net realizable value. We'll only have um, complication if there is under allowance or over allowance, because if there is trade in, guys, under allowance or over allowance may deviate or may change your gross profit rate. Okay, when the trade-in allowance is equal to the net realizable value, then again, there is no accounting problem. So to compute for the difference, we have here your pro forma trade-in allowance, or the allowance given by the seller, or um, the amount that is um, the amount that is given on, or the amount that is approved on the traded in nga merchandise or traded in nga inventory, less net realizable value, which is equal to the estimated resale value less reconditioning cost less normal profit margin. So the difference will now be the over allowance or under allowance. So same case in computing the gain or loss on repossession, in a way that when the given information, if the selling price or resale value, you have to deduct the normal profit margin. So again, if the given is selling price or resale value, you need to deduct for the normal profit margin. The accounting treatment for under allowance is addition to the sales, while over allowance is recorded an either over allowance on traded in or deduction from sales. So ang effect ni under allowance, guys, is mas dako ang net realizable value kaysa sa gihatag nato na approved value sa traded in. So meaning that is beneficial on our part, meaning there is more income. That is why it will be accounted as part of our sale. So that is under allowance. Meaning, for example, ang net realizable value sa sasakyan nga gi-trade in is 50,000, but ang approved value lang is 40,000. So meaning, we have a gain nga 10,000 from that under allowance. So that 10,000 will be accounted as part of our sales. Pero kung over allowance naman, baliktad. The net realizable value is 40,000, but the approved value was 50. So nalugi ta ng 10,000. And if that's the case, it will be accounted as over allowance on traded in account or deduction from sales. So as what I have mentioned earlier, that if there is under or over allows allowance arising from trade in, then the gross profit rate will be change. So ang GPR nato mag-change. It's either mudako ang atong GPR or mugamay ang ato ang GPR if there is under or over allowance. Okay, for example, we have here a first problem. Assume that on April 1, 2020, Motor Sales Company sells a car for an installment price of 145,000. So the car costs 100,000 and the customer is allowed a trade-in value of 45,000. So this is the trade-in allowance 45,000 for his old car. He makes his down payment of 40,000 and the balance to be paid in 12 equal installment at 5,000 each. It is estimated that the old car can be sold for 70,000 after incurring reconditioning costs estimated at 11,000, and the company usually makes a gross profit of 20%. So if you have noticed, guys, this 70,000 is our estimated resale value or estimated selling price. So again, as suggested earlier sa ato ang tip accounting note na if the given is resale value, then therefore we need to deduct reconditioning cost. So we have here to compute for the over or under allowance. So we have trade-in allowance na 45,000, then less that realizable value, which is your estimated resale value na 70,000, less reconditioning cost na 11, and normal profit margin nga 14,000. So that 14,000 is from 70,000 times 20%. So therefore, your net realizable value is 45,000. So in this case, we don't have any difference. That also means that the approved allowance for the trade-in merchandise is equal to the net realizable value of it. So we don't have accounting issue to that. So the entry to record the sale of new car would include, so debit tayo merchandise inventory traded in katong merchandise nga nadawat nato at fair market value of 45,000, and then also debit cash for the for the down payment of 40,000, and then debit installment accounts receivable nga 60,000, and then credit installment sales for 145,000. Okay, the installment sales really here, guys, is 145 minus the merchandise inventory nga gitrade in 45. So therefore ang madawat na lang nga cash is 100,000. And then naman daw tayo down payment nga 40. So therefore ang atong installment accounts receivable nga bayaran daw og 5,000 for 12 equal installment will be 60,000. Okay? And then to record the cost of installment sales, so we have their debit to cost of installment sales ng 100,000 because the cost of sales for our car is 100,000. So credit to merchandise inventory also for 100,000. Okay? So in this case, balikan nato sa case 1 where there is no under and over allowance. So your gross profit rate there will not change. So, kung unsa ang yahang original na gross profit rate will not change or will remain the same. Now let's proceed with second case. Assume that a stereo component with a cost of 12,000 is sold for 17,000. Okay? Assume that stereo component with a cost of 12 is sold for 17. A used stereo component is accepted as traded in at a valuation of 6,000. The seller expects to spend 250 to recondition the use of merchandise before reselling it at 5,000. So therefore, ang estimated resale value nato is 5,000. And then we have reconditioning cost of 250. And then your normal profit margin is 50%. So therefore, we will now compare the net realizable value and the trade-in allowance provided. So we have trade-in allowance provided na 6,000 versus the net realizable value which is 4,000. Si 4,000 is from estimated resale value nga 5,000 minus reconditioning cost na 250 less normal profit margin na 15%, which is from 5,000 times 15%. So that is 750. So therefore, we have an over allowance of 2,000. Again, guys, kung naatay over allowance, that is the disadvantage of the entity, or that is the advantage of the buyer, because ang gihatag sa iyaha nga allowance or ang gihatag sa iyaha nga or ang approved allowance is 6,000, pero where in fact it can only be realized for only 4,000. So in a sense, nalugi si entity or nalugi si seller og 2,000. And again, ang atong treatment anang over allowance na 2,000 will be either accounted as over allowance trade on trade-in or as deduction to our sales or as part of our additional expenses. So in this case, it is accounted as over allowance on trade-in. So our journal entry for this guys will include debit to merchandise inventory traded in katong um, um, okay, we have merchandise inventory traded in at 4,000. So it will only be recorded at 4,000 because we have an over allowance on trade-in nga 2,000 because the fair value talaga ng inventory traded in nato is 6,000. But since there is an over allowance of 2,000, such 2,000 will be accounted as over allowance on trade-in. So therefore, 4,000 na lang ang i-account nato sa merchandise inventory traded in instead using the fair value of it. And then, we have installment accounts receivable for 2020 nga 11,000. So, asa gikan si 11,000 guys? Si 11,000 is gikan sa original nga selling price sa installment accounts receivable nga 17,000 minus sa trade-in allowance provided nga 6,000. So, na lang tayo installment accounts receivable na 11,000. And then, credit to installment sales for 17,000. So, since naatay over allowance diri we can expect nga ang ato ang gross profit rate will be changed. Now, to compute for the new gross profit rate, so the new gross profit rate will be computed as follows. So we have here installment sales na 17,000 less over allowance. So again, ang treatment ng ating over allowance is a deduction to our sales. So therefore, your new total installment sale will be 15,000 na, no longer 17,000 due to our over allowance. Less cost of installment sales nato nga 12,000. Cost of installment sales nato na 12,000. So therefore, we now have a gross profit of 3,000. So therefore, 3,000 new gross profit over the new net installment sales nga 15,000. So ang new nato nga gross profit rate will be 20%. Compared nato sa ato ang old gross profit rate nga 5,000 divided by 17%. So ang atong new rate will now be 20%. The entry to record the sale of the if the treatment of the overvaluation or of the over allowance is deduction from sales, kay duha man ang ato ang pamaagi guys kung natoy over allowance, it's either i-recognize nato siya as over allowance sa traded in, over allowance on trade in, or pwede nato siya i-account as deduction from our sales. Kung deduction from our sales siya, then therefore our entry will be debit to merchandise inventory for 4,000, debit to installment accounts receivable for 11,000, and then credit installment sales for 15,000. So mawala na si 2,000 diri nga over allowance for trade-in, and then gideduct na siya diri or ginet na siya diri kay installment sales. So that is why we credited installment sales there for 15,000. Okay? So that is if there's over allowance. So this time, let's proceed to case 3, the last case, and the last topic also for this short continuation of our video lecture. So using the information, assuming that the trade-in allowance is only 2,000. So instead, kanina of giving an approved trade-in allowance of 6,000, let us say nga 2,000 lang daw ang trade-in allowance nato. So less net realizable value of 4,000. So meron tayong under allowance. So under allowance meaning ang net realizable value is mas dako kaysa sa again trade-in allowance nga gihatag nato. So that means that is beneficial on our part. That is disadvantage on the part of the buyer nga nag-trade in kay mas dako ang iyang gihatag, gamay lang ang na minus sa iyahang installment receivable. So the entry to record the sale will be debit to merchandise inventory traded in, no, which is 4,000, and then debit to installment accounts receivable for 2020 nga 11,000, and then credit to installment sales na 17. Okay, so in cases wherein an under allowance results from a trade-in transaction, the trade-in value allowed to customer is less than the net realizable value of the merchandise traded in, then the under allowance is treated as an addition to the selling price of the new merchandise for which the old merchandise is traded in. So that is why again, kung meron tayong under allowance, your gross profit rate will be changed. So mutaas ang atuang gross profit rate diri since we'll have an additional na installment sales or additional sa ato ang installment sales. So from that, the new gross profit rate will be computed as follows. So nata installment sales nato na 17, then you add your over allowance under allowance na 2,000. So this time naman tay under allowance na 2,000. So therefore we have new total installment sale nga 19,000 less cost of installment sales nato na 12,000. So therefore, our gross profit will be 7,000. So to compute for our new GPR, we have 7,000 nga new gross profit over 19,000, which is our new net installment sale. So thus, giving us a new gross profit rate of 36.84% compared with our old gross profit rate nga 29.41% from 5,000 lang na gross profit rate. So that's 17 minus 12 over 17,000. So that's 29,000, 29.41%. So the entry to record the sale naman if the under allowance, the entry to record the sale under over allowance will be as follows, with over allowance will be as follows, or under allowance will be as follows. So debit to merchandise inventory traded in for 4,000, and then installment accounts receivable 2020 na 15, and then credit to installment sales for 19,000. So again, nag-iba ang gross profit rate nato basta may ano, merong trade in, and then may over allowance and under allowance. Okay, so additional note, merchandise inventory traded in is presented in the balance sheet as part of the ending inventory. So the traded in merchandise will be part of our um, balance sheet as ending inventory. When a periodic inventory system is used, trade-ins are recorded in a separate nominal account, which is traded in merchandise. And this balance is added to the purchases in determining cost of goods sold at the end of the period. So earlier, tong nag-compute sa previous discussion nato when we allocated cost of goods sold, naata didtoy item nga repossessed na materials or repossessed merchandise, gi-add nato siya sa ato ang net purchases. So diri same pod ang treatment. When there's trade-in merchandise, it will also be added in the purchasing or in the purchases or in computing your total purchase net purchases in determining the total cost of goods sold at the end of the period. So again, that's the important na mga aspects that we need to consider if there is first repossession, second trade-in. So kung repossession, no GPR changes, pero kung trade-in, meron lang change in GPR or change in gross profit rate if and only if the trade-in results into over allowance or under allowance. So that's the end of our video lecture, the second part of our video lecture in installment sales. So if you would like to read for supplementary na mga additional um, information about this topic, you may refer to these references. So again, if you have clarifications and puzzled thoughts in the context of installment sales, particularly on repossessions and trade-ins, you may refer it during our video or virtual class. Again, see you on our next video and good luck on your second exam.